Now, investors remain on the sidelines as they await the outcome of the 360 billion bond auction. Meanwhile, Nigeria's headline inflation rose to 26.7% year-on-year in September. Dipo Ajayi, head of fixed income and forex at Chapel Hill Denham Securities, joins us for more market updates. Dipo, thank you for joining us today.
Thank you very much for having me.
Let's start with the bond auction, 360 billion and the outcome. So share with us your expectations around subscription levels and stop rates that you expect.
Well, if you want to take credence from what happened on Friday at the Sukuk bond issuance, of course, the subscription was actually very massive. It was north of 600 billion. What was actually floated was 150 billion. So the DMO ended up selling about 350 billion on Friday. And now knowing fully well that we're coming to another week. Of course, the expectation before then was the fact that a lot of people are feeling that, okay, there will be dearth of liquidity in the system, considering that huge mop-up that we saw on Friday. But it was amazing that when market opened today, we saw a miracle of about 600 and something billion,
wow.
562 billion opening on the market. So that has changed the dynamics of expectation. We're expecting that rate may actually go the roof compared to where it was last auction. We're already thinking maybe the long end will actually trade close to about 16.5. But in a situation whereby you're now finding that there's a lot of liquidity in the system, of course, as to speak, a lot of people can still lay claim to the reasons why we saw that huge liquidity. It could be from a swap that actually matured, but we can't actually say categorically. But with that on ground, now we think the rate may not be as bad as a lot of people would have expected. So I think we will be a bit conservative around 16.35 levels for the long end.
Now, from January up until now, September, how would you describe, trading for investors? I know that at some point, we know that on the one hand, the government is trying to bring down the cost of borrowing, talking about debt service. On the other hand, it's still a high inflationary environment, and of course, real return is still negative. But at some point, investors do push back, insisting on higher rates to hold on to government security bonds. And we know that, especially for institutional investors, there's really, in terms of options, there aren't too many options, for the market. But how would you describe the investment journey so far this year?
Well, for institutional investors, I think the investment journey has not been very, very great this year. When you look at where inflation has been printing since the beginning of the year, just earlier today, we saw inflation at 26.7, and that's actually massive when you compare to where yield is currently trading. So if you're now comparing it with long-dated instrument, that's like a 30-year bond is the market now. Let's take, for instance, 16.5, although it's not there yet, but let's assume 16.5. So it means that you have like 1,000 basis point negative real return on your investment. So how do you cushion the effect of that has been the problem in the market? And that's one of the reasons why when the CBN, governor was trying to find a way to actually drop rates. That's one of the reasons why we saw that pressure in the parallel market, because a lot of people were thinking, why would I invest for a year for 7%? It doesn't make sense. I would rather buy dollar and hold.
Yeah.
And but when they start seeing the impact of that in the parallel market, they need to actually do more like a policy somersault at that particular point in time and actually change things. And for me, so I don't think it has been that great for most people, but you just need to actually put your money in an investment.
But what about the Eurobond market? That has seen some spikes this year, especially the removal of the former central bank governor, and then we had the policies that came on stream, the removal of a few subsidies that sort of brought confidence. We saw that spike up in rates, but your thoughts on how that
for Eurobond, it's been a very good journey for anybody that has been holding the instrument. We'll not talk about only the interest rate return only, because that's not only the return that's accrued to people in that space. You also need to look at the benefit of devaluation of naira, because maybe most time when you were holding the instrument, let's assume you are holding when the rate was at 470, and now by the time you are translating back to naira. So when you look at it, sum up together, you'd have had close to about 90% return when you look at the valuation and couple with other returns, and that has accrued in the market. And when you still look at the market, there's a lot of instruments that still beckon for attention in the Eurobond market. You look for like Access Perpetual, an instrument that could be called in the next 3 years, giving you a return of about 16%, a dollar-denominated instrument. These are some of the investment that actually that looks like a go for most people in the market.
But is that a story for for corporates at the corporate bond market, trying to raise cash, through commercial papers, etc. And of course, looking at the FGN benchmark, and how affordable it is for those corporates to raise cash at the current rate.
It's been very, very challenging, and that's one of the reasons why I said that I think the government has been very aggressive this year. Of course, when you look at the budget at the beginning of the year, the budget deficit is not of 10 trillion, and the program is that they're going to raise over 7 trillion locally in the market, and as at August, they've done about 4.6 trillion as at August too. But the dynamics, a lot of people were thinking that they might actually take a step back, knowing fully well that we've heard statement from the Minister of Finance that they've been able to generate more revenue, and at the same time, they are not going to be more aggressive and all those things. So when you look at all those things summed together, it looks as if, we don't expect to see an aggressive federal government by Q4 ball. When we saw the calendar for the Q4, it was amazing. A lot of people were surprised at what we saw, that it was not different from what we've been seeing from the beginning of the year. So it simply means that they are not really walking the talk of what they say, and that's one of the reasons why market has been a bit very quiet.
I mean, you cannot run away from the realities in terms of pressure on revenue and the need to, of course, fund critical infrastructure, etc. Let's talk about the FX market. We had that news coming into the market, the 3 billion from FX, that hasn't, panned out so far, and then they talk about clearing the backlog between 6 to 10 billion. The CBN says it will actually, do an audit to see how much the backlog is worth. But talk to us about, the market so far, the recent policy, where the naira is, and your forecast for trading ban for the naira going forward. Remember, eventually it's still a supply issue. To a large extent, but let me let you comment on that.
Just like what you just said, it's supply issue. For me, I think everything is set. It's just for you need supply, and that's one of the reasons why when IMF said that they are open to giving Nigeria loans, it makes a lot of sense to me, because what we need now is we need FX revenue. FX inflow. It could be in form of loan. And even if you want to say, okay, you're going to an IMF window to actually raise
the IMF has said the country is free to come and...
Because as we speak, I would say that we have ticked almost 90% of their boxes. Because removal of subsidy, we've done that. We'll be able to harmonize the FX window. I think the only thing they will actually want us to do is to be more aggressive in rate hike, so as to be able to rein in inflation. Right. And I think that would have been the only outstanding thing that would have been on the box that is on tick as we speak. So for IMF, I think it would have been a very good opportunity for us to raise money. And just also, World Bank is also available if you want to, but we need FX. Inflow.
We certainly do.
Spend the time.
Thank you so much, Dipo, for talking to us. We appreciate your time. Dipo Ajayi, Head of Fixed Income and FX at Chapel Hill Denham Securities.